Hello everyone, welcome to the SBI Securities Weekly Wrap podcast. It was a stellar week for Indian equity markets with the benchmark indices hitting lifetime highs for the second consecutive week. The Nifty crossed the 21,450 level and Sensex crossed the 71,500 level for the first time. For the week, Nifty and Sensex gained 2.3 and 2.4% respectively, continuing the momentum of the previous week, during which markets rallied 3.5%. Broader markets also closed in line with the benchmarks. The mid-cap and small-cap indices gained 2.6 and 2.4% each. Global markets, including India, rallied post the dovish US Fed monetary policy. Fed Chair Jerome Powell indicated that there would be at least three rate cuts of 25 basis points each in calendar year 24. The rally was further aided by the US 10-year Treasury yield dropping sharply to sub 4% levels, ending at 3.9%. FIIs also came back to Indian equity markets and the dollar index declined to 102 levels. Sectorally, BSE Metals, IT and Realty gained 7%, 5% and 3.5% respectively. Bank Nifty and Metal Index touched lifetime highs during the week. FIIs remained net buyers for the week. They bought 16,287 crores, a big figure, while DIIs turned net sellers on profit booking, selling worth 2,600 crores of equities. The key domestic event during the week was the October IIP, which came in at 11.7%, a very strong number and above expectations, while the November CPI at 5.6% was below expectations and indicating softening of inflation. Talking about the weekly sectoral gainers and losers on BSE. So all the sectoral indices on BSE ended in the green except BSE Consumer Durables. IT index was the best performer, up 7% for the week, led by stellar gains in large cap IT stocks following the dovish Fed commentary. The metal index, realty, PSU, capital goods, and power indices also gained between 2.5 to 4.5% in the week. Talking about the gainers and losers on Nifty. So the top gainers were IT stocks, so HCL Tech, LTI, Mindtree, and Tech Mahindra among the top 5 gainers. Hindalco and NTPC also were in the top 5, while among the losers BPCL, Maruti Suzuki, Dr. Reddy's, Nestle, and Cipla. Some key monitorables. So, as I said, FIIs rode back into action during the week with a net buy figure of 16,287 crores, while DIIs turned net sellers, selling about 2,593 crores. The dollar index declined to 102 levels from 104. The Brent crude has also stabilized at $75 to $76 per barrel, which is another positive for Indian markets. The US bond yields also declined to sub 4% levels following the dovish commentary from the Fed. In some key corporate developments during the week, so railway sector orders came in plenty during the week. Jupiter Wagons received an order worth 1,600 crores to manufacture and supply 4,000 box wagons, freight wagons. Texmaco Rail Engineering also received an order for 3,400 such wagons, and this order was worth 1,374 crores. So both Jupiter Wagons and Texmaco Rail Engineering rallied during the week. In the power sector, Genus Power Infra received a letter of intent worth 1,026 crores for advanced metering infrastructure solutions, and this was for 1 million prepaid smart meters, so incremental orders for Genus Power as well. Dixon Technologies subsidiary Padgett Electronics was awarded a contract by Lenovo to manufacture IT hardware under the revised PLI 2.0 scheme, which was announced recently by the government. Adani Ports, the company entered into a second strategic partnership with Mediterranean Shipping Company, and has sold a 49% stake in the Adani Ennore container terminal, and the company will receive 247 crores from this stake sale. This week we released four trading calls. So in the pick of the week call update, we have given K Fintech at the price of 530 rupees with price target of 636 rupees. This is a company which provides financial services platform. It provides services and solutions to asset management companies and corporate issuers across asset classes in India. It has a 34% market share of the total Indian equity mutual fund AUM, and it has gained 520 basis points market share since FY20. It services 25 out of the 46 asset management companies in India. It also has a market share of 47% among NSE 500 companies for issuer solutions and is a leading registrar for IPOs. So, with the Indian equity markets doing well as the IPO market booming, K Fintech looks good. Another call in pick of the day was CAMS. We have recommended it at a price of 2,740 rupees with price target of 3,014. CAMS is also in the same financial infrastructure segment. It serves 69% of the average AUM of mutual funds, and it also provides technology enabled service solutions to mutual funds, AIFs, and insurance companies. The company generates EBITDA margin of more than 40%, while return ratios are about 32 to 38%. And it is witnessing strong growth in new client registrations. So, with valuations of around 34 times FY25 earnings, we have recommended a buy on the stock. The fourth call that we gave out was a PSU bank, Bank of India. We have recommended it at price of 110 with a target of 124. Double-digit loan growth is expected to be driven by the retail and corporate segment. The bank has excess liquidity to tap into this growth, and there is also scope of margin improvement. It is currently trading at a very attractive valuation of price to book of zero point 0.7 times FY25 earnings. So these were all the calls. During next week, we believe positive momentum to continue with some consolidation in the second half of the week. Going forward, corrections are not likely to be deep and prolonged. Globally, also, the activities will cool down as the Christmas holiday season approaches. So, we expect stock specific action to continue in the Indian equity market, with funds chasing rate sensitive sectors like banks, auto, real estate. In addition, sectors pertaining to the Indian equity markets like broking, exchanges, AMCs will be on radar of investors. Investors are recommended to follow buy on dips approach to deploy any incremental capital in the equity market. For key corporate actions in next week, kindly refer to our weekly wrap report. The link to view the report is shared in the description box below. This was all about the weekly market podcast. Thank you for listening. Have a great trading week ahead.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.